Clean slate. What's going on, everyone? Welcome on into today's trade recap. We are here on the TradeZilla dashboard, and we are looking at a $99.33 day, apparently here. This is going to be an update on a couple of things. I did take a couple new positions. I also closed out of an old one, hence the gain. So we finally realized about 80-ish or 90-ish dollars of this day. And so I'll talk about why in the thought process there. But so far, that is all we have for the month. We've got a total of 2 trades. Now, there are multiple trades open, but 2 so far. So inside of our current open positions, I think we're going to see, it has some of it logged right here and whatnot. But we have $99, and most of that is made up of GameStop. So I finally closed my short on the remainder of my GameStop position. And I want to pull up the chart and show you why, but that was done today. And then AMD, I made $10.70. Woo! The AMD, the $10 is me locking in about 30 of 100 shares on an AMD long that I took today. The chart doesn't tell me to sell it, but I just wanted to lighten up in case of an overnight gap down that was larger than where my original stop loss is going to be. I don't think that's going to happen. Of course, it could. Anything can happen, right? It's the stock market, but that's essentially why I did that. But I'm letting the chart speak. I like the AMD chart. So we'll pull up all of these. We'll start with GameStop and we'll move our way through. After GameStop, we had Adobe, then AMD, then the S&P 500, which is still open as we speak. So I think I adjusted these guys or this thing, so it's a little bit off. Let me just readjust the thing on the right hand side here. Not gonna be perfect because I can't totally see it, but it's close enough. Okay, so GME, I sold or I bought back the rest of my position on GameStop. Now the reason why I did that is because of what I'm seeing here. We have earnings coming up in December. I'm not really scared of earnings, I'm going to be honest with you, but I entered GameStop back here in late September, early October, I believe, one of these days, on the breakdown. Got a really nice move, and now what I see is a potential inverse head and shoulders. At the same time, the market does look quite bullish, and so I'm like, you know what, let's just lock the rest of it in. It made a nice push. And we've got earnings coming up in a couple weeks, so I'm not going to hold the earnings and just let it consolidate here, and it could be a play again in the future. It's also a stock that, like, in my opinion, like, is a decent short to have on the radar just for the next, I don't know, maybe 6 to 12 months, as it likely has more room to come down as it's giving back. If it's going to follow the same thing as AMC, there's potentially a lot more to give back at some point here on GameStop. But again, I'm not like trying to time that. Like, realistically, like, my stop loss was moved to the highs of last week. And to be honest, I probably should have stopped myself out because I probably should have adjusted the stop loss to this high right here. So I should have gotten stopped out on that with a trailing stop loss anyway, for the rest of the gains. But that's it. There's not a ton of like rhyme or reason outside of what I have already said. The reason really is more so to clean things up, realize the gain, and then market looks bullish. So I just would prefer to not be in a short if the market's bullish for a trade. Hedge, yada yada, yeah, fine, but that's not what I'm doing here. I'm not like gonna blindly hold and hope and pray. So that was that. Now the next position was on Adobe. So let's pull up Adobe here really quick, because if I go back here, so Adobe, I entered along at 9:03 a.m. Now, 9:03 a.m., well, here's the problem that I have on Adobe. Not that it's like a bad thing. I kind of have my 3 bases covered, okay? I have my Adobe swing is more so based on the weekly chart. So as we can see, we had a massive move in May, and then a kind of a slower consolidation to the upside. And now we're breaking that consolidation that we've really been in since July. And it held up nice, and now it's breaking out. So I am looking for a push higher. I'm looking for about 610. I think 600 is doable, but I think, I think a 610 is going to get you right up into the lows of here. That's what I'm looking for, 610. It gets you kind of up into this next, just shy of this next volume node up around the 620, 625 area. So 610, and not to mention 610 also becomes a nice spot based off of what I'm risking. So I'm risking the lows of the breaking candle. And so if I'm playing a weekly chart, the lows of the breaking candle are going to be this 558 area right here, the low of this candle. Okay, so that's my stop loss. It's pretty tight. In theory, right, it could just do this and then eventually go later on. Yeah, it could, but then I would be wrong in that this trade didn't have the momentum right now and it's not going to go. That's kind of bleeds into target, which I'll get to in here in a second. So that's the Adobe trade on the weekly chart. I did get in at 9:03, but if you were to go to a 5-minute chart, so on that blue line where I had my alert set, that was the breakout. Look at what happened on Adobe. It like legitimately didn't pull back. The thing rips up and it goes from this 574 all the way to 580, and then it pulls back to 577. So it did pull back, I guess, $3, and I entered around 579, 580 or something like that. Not the biggest deal in the grand scheme, but I would have liked to get it a little bit lower, but it is what it is. Ended up having a nice little flag here and then a nice push to the upside, but it's not the cleanest 5-minute chart that I would trade. Doesn't have as much, doesn't trade as much volume as some of the other stocks that are on my watch list above my head right here that I would trade on a 5-minute time frame. So I trade this on a bigger time frame. So looks good. All looks good there. We're looking for a 610 plus, and that's it. We're just going to kind of sit back and let it do its thing. It moved $20 today, so the thing can move a lot. It's a higher price stock, so, you got to size accordingly, and that's what I did. So that's that. Then we have AMD as our next position, which we are currently still in. Here's AMD's weekly chart. Not that I'm trading off the weekly chart here for AMD, but I just want to start the frame kind of right here, because if you notice this weekly chart and you notice AMD, right, it has been in this downtrend for quite some time. Fair, makes sense. We had this massive volume push that broke the downtrend just last week. So on a big time frame, I like this look. Now, also look at this. We are at the top of a high volume node. Above 110 looks pretty good volume profile wise, and we tend to see price action move faster when there's less volume to work through. So using those things, I'm like, oh, this looks pretty interesting, right? And then I see AMD and I go to the 4-hour chart. That's kind of how I found this setup. And I'm like, oh, this looks very, very interesting, right? AMD had this big push, had this consolidation, next push, has essentially a double top high right here at this 113.40 or so, and then pulled back, but then it broke it. So I'm playing this breakout right here on the 4-hour chart. Now, it did break out, it went higher, it actually got up towards 114.65 or so, but then it came back down and it's kind of sitting right on the breakout zone. So I'm not like not a ton of momentum, not massive momentum, but not bad. And my stop loss is the low of the breaking candle, which is down around 111.20. Call it 111 roughly. So that's why I wanted to trim some of it off. I'm technically up a touch from where I entered, but just in case you get an overnight gap down, I can't sell overnight and whatnot on the broker that I'm using. So, even though I'm playing on the 4-hour chart, it shouldn't be a huge deal. If, let's say, AMD opens up down here for whatever reason, at least I'm not going to get crushed. You know what I mean? Because I lock some of it in. So that's why I lock some of it in at roughly break even. And the S&P 500 is a position that I took as well. This trades throughout the night, so I have a stop loss set. I've got a take profit area set. Ideally, I would like to scale out, but stop loss is set, which is the most important piece. And then my upper take profits kind of set. So in case it spikes up for whatever reason, it might just hit it and I'll get taken out if I'm not paying attention. So I like to just do that when I'm not paying attention, make sure I kind of have a bracket set to where in worst case scenario, we're good. So I'm looking at here's the S&P futures. Again, same kind of idea and concept here than what I actually traded on the broker, but same thing. So here's the level, right? Breaking out over this 4-hour chart. It had a nice little flag right here, had a big move. We have a little bit of a larger flag right here, and it broke out and it closed above. So I like the look. it's just it's taking its time. There's no rush. It doesn't look bad. It back tested here and it's still fine. So my stop loss on this, I have it at the bottom of the consolidation. I will move that up to the breaking candle low as time progresses if we do push higher, but that's kind of where I have my stop loss right now. It's tight enough of a stop loss for where I'm looking at and take profits that that's a valid area, and the way I sized in, that's where I kind of have it at accordingly. Now, bigger picture, if you were to look at the S&P futures, this gets interesting, right? Because I kind of zoom out on this chart. I'm like, okay, let's take a peek at what we've got. Here's why I'm like pretty intrigued by this trade, because if you look to the right-hand side, if you give it a second to load up, and you'll see the volume profile. We are right now approaching, or at a higher area, right? A higher volume node, which I don't love, but just to the north of this potential breakout is the highs of, what is this, back in early or mid-October, the mid-October highs. And then beyond that, which we're not that far away, it's a pretty nice gap in volume. So we could look at a potential, like this is a swing trade. The potential here is a nice fill through this area. Now, of course, maybe we don't get it. Maybe we don't. It's actually, it's quite likely that we get a pullback because we have really made a massive move without a pullback. But the chart is continuing to show strength and it's setting up. And so once that invalidates and it breaks down under here, I get out. But until then, I play the chart. So that's all I'm doing. That's all I see. This one I liked on the 4-hour time frame. And so what my kind of view the past couple of weeks and months, or past couple of weeks, I should say, has been to stop playing, not stop, but I have been playing less and really this month so far, none of the 5-minute chart breakouts or breakdown patterns, and only focusing on the bigger time frames when they present. And so now that we're getting some opportunities and some of these charts are presenting, we're playing them. But that's really the deal. So, ultimately, not a ton of action here. And really, it could end up reversing on me. Now, my other open position is on Target. This is a long that I don't love at the current moment. I entered this position on Friday. And I'll go off it's off the daily chart is what I'm playing it off of. And so you had a breakout of this consolidation on Target. Now, the reason why I like Target, it's a logical trade. It's not a bad trade, I don't think. But it hasn't been trending up for very, very long. So not surprised that we're in this position that we're in. But what I mean is that you had the lows get put in here in early October. The S&P and the NASDAQ and the Dow went lower than those early October lows. What did Target do? It actually built a higher low, double bottomed here at around 106.50. So in the situation that we have on Target now, I'm looking at, okay, break this consolidation and push. And technically, you could have even entered it on this break right here, on this top of this consolidation. But I entered it on Friday, had stuff to do, walked away, set my stop, and then left. As it closed on Friday, it ends up closing under the breakout level. Didn't love that in a perfect world. Maybe there's a scenario where I was like, you know what, I'm just not going to play this. I'm going to get out of it. But I did not see it. I just kind of left for the day. Monday wasn't the best day. Today it bounced back a bit, then it sold back off. So it's not the best, but it is sitting on this volume node. So if it breaks down underneath this volume node, I'm out. So 110 is the area. I could even step out before that, but I'm roughly out at 110, give or take. And it just doesn't have the momentum, which is that. Also earnings mid next week. So we're about a week or a couple of days out, or a week and a day out from earnings. Got to be careful about that. I will not hold through earnings. My thought process was break out of this consolidation. You have relative strength versus the S&P over the past couple of weeks. This would be one of the first bouncers, or this could be a strong bounce back trade. You've got a volume gap right here all the way up into the 120s. I was targeting 120, and that was the trade idea. Just doesn't seem like it's got the juice, the momentum, which is not surprising. You know what I mean? Given how Target is sitting. So I may end up getting stopped out here. Looks like it could be a dud. And if it is, it is. That's just the nature of the trade, and just probably want to stick to stocks that have been trending higher for a little bit longer, and you have a better bet on the upside, probably more momentum, more breakout, whatnot. Thought we could see it on Target though, and then you had the relative strength right here, which was valid for the breakout. So that was the idea. But that is essentially a full update. So while currently we sit at around $51,000 or give or take in the account. In the prop account, we have some open positions. So that could move by a couple $100 up, down, or it could kind of stay flat if some of them hit take profits, some hit our stop loss. Like, so we're kind of in between. So we'll see what happens. Obviously, you know, we're long. So ideally, if the market goes higher, we're probably going to go up. And that's what the charts are telling me for now, but that could obviously be wrong. So we'll see what happens. We're 20% of the way there. I, you know, would like to, I'm going to start smidging up in my sizing, not aggressively by any means, but, you know, only when conditions permit. And when I say conditions permit, I mean, you know, we got to get good setups. We got to see good action, and things look promising, but, you know, no guarantees. Things could reverse right back, and then we could be back in this chop again. So we'll see what happens. That is today's trade update. Trade recap comes in at a realized positive day. Tomorrow could be very different, and the day after could be very different than that. So stay tuned for the future videos we've got there. I'll leave links to TradeZelle, where we track all this stuff down below. TradingView, Surge, anything that I use. Anything that I use, I'll leave it down below this video. Thanks so much, and I'll see you guys in the next one. Peace.